All right, guys, we are back. Lance Martin, Coldwell Banker Town and Country, and we are ready to go for our March market snapshot. However, today's version of our snapshot is going to be a little bit different because we are about 10 days away from our 2023 real estate market forecast. So I'm going to give you a little taste on what you're going to see on March 15th, and we're still going to do our snapshot. So I'm going to add about 7 minutes to today's video, so stick with me till the end. So our forecast is set up, if you remember last week, we had the wrong location. So for those of you that were thinking it's not at the Fox Theater, it is at the Fox Theater. So downtown Riverside, Fox Theater, it's right next to the Mission Inn, walking distance, kind of across the street. March 15th, we start at 8, registration 8 to 9. Program starts at 9. We're going to run solid all the way through till 1 o'clock, and I'll show you some speakers and what to expect here in a little bit. I'm going to give you a little bit of taste. So if you're planning on attending the forecast in 10 days, March 15th, this QR code is going to be the live QR code that we're going to use. It has all the material that's at the market forecast. Right now, when you're watching this video, if you go to it, there's stuff there. But on the day of and leading up to the forecast, all of the presentations, every single slide, every single piece of material that we're going to be presenting and the speakers are going to be presenting, you'll be able to get at that QR code and it'll be sitting there waiting for you. This is my QR code. Take a peek at it if you want. Similar information, but more Lance stuff. So what I want to do is I'm going to go through our speakers real quick before we get into this month's snapshot. So there's me, and Adam did a beautiful job photoshopping my face. Looks like a younger version, even though that picture was taken a couple months ago. We've got Dean Wang with the University of Riverside. And we're basically partnered up with the University of Riverside, which is kind of nice, UC Riverside. So he's going to be there saying hello. Mark Dowling with Inner Valleys Association of Realtors is going to speak and also sit on a panel. And they do some market stuff as well. We've got Jesse Armendariz, the San Bernardino County Supervisor. I can't remember exactly what ward or district he is, but Jesse's going to be there, say hello, and kind of let us know what's going on from the San Bernardino County Board of Supervisors perspective. We've also got Paul Herrera. I know it says need official title. Paul's a political guy. He's working with Jesse and a bunch of the Board of Realtors. So Paul's going to come and kind of give us his 2 cents on what he thinks is going on out there. I've got Ashley Dembowski with Coldwell Banker Corporate, going to tell us a little bit about what's going on in the franchise world as far as what they see going on in this real estate market, et cetera, et cetera. Barry O'Connor is not a market forecast guy, but for those of you that know Barry from previous forecasts, he is, in my opinion, the #1 eviction attorney in the Inland Empire. And he's going to talk to us a little bit about landlord-tenant law, basically kind of coming out of COVID, how all that stuff is working. So even though we're an economic forecast, we're also an industry forecast. A lot of the people that I believe attend my forecast are landlords, tenants, and investors. So you'll be very interested, quite honestly, probably a little disappointed, because Barry does not bring good news. It's very difficult out there right now in the eviction property management world, but Barry's going to come in. Barry's only going to do us probably about 7, 8, maybe 10 minutes, but we're going to do an extended long-form video. You'll get more information from Barry as well. Mike Marconi with Orange Coast Title is going to come out and say hello, tell us what he thinks is going on out there, because everybody in this business is projecting where they think this economy is going and making adjustments accordingly. As Chris Sorson, I love Chris. Chris and I have known each other kind of from a distance for many, many years. Always respected his opinion. He certainly has one on everything in relation to our marketplace. So Chris is going to come out, also do a little piece, standalone, and then put him on a panel afterwards. Chris Thornberg, so we've got 2 economists again this year. Chris is going to come out with Beacon Economics. He's going to give us his take on what's going on. Just to oversimplify it, Chris says, hey, everyone relax, no recession coming. Immediately following Chris, we're going to have Manfred Kyle with Claremont McKenna and a whole bunch of other titles that Manfred has here he sent over, and I think I'm missing one. Manfred's going to come out. Claremont McKenna and his group have a little different opinion on what the economy's doing. Again, I'm oversimplifying it. Chris says no recession. Manfred says recession. So I guess obviously we'll have to determine what that looks like. Actually, I'm going to back up just a second. When we're done with Manfred, we're going to bring a panel in, a lot of those folks, and then we're going to discuss at the end of the conference, going to take questions from the audience and say, hey, okay, what do you think? Chris says this, Manfred says that, we think this, and then we'll try to sort it out a little bit. We got a little bit of bonus material. Art Carter from CRMLS is going to come out. We actually shot a video. Art will not be on site. Art is shot a video for us. I should have posted it a week ago. I haven't. I'll get that posted before the conference, and you can see what Art has to say. along with Ido Benzivi. Ido will probably not be at the conference. We have a scheduling conflict, so we'll do a video shoot of Ido and we'll see what happens. And last but not least, I probably should have talked to Bruce before I put his picture on here. Bruce is in Florida. He's not going to make it out for the conference, but I fully intend on sitting down with Bruce, doing a Zoom or doing a face-to-face. I'm actually going to fly out to see Bruce here in a month or so, and he always, of course, has interesting stuff to say. So, so that is our lineup. Well, March 15th, Fox Theater. It's going to be great. It's live. I'm super excited. I'm probably talking too fast right now, but I am truly amped up over this. Again, we partnered up with the UCR School of Business and Center for Economic Forecasting and Development. They are our event partner on this year. Super excited. They normally do their forecast in October. We normally do ours in March. Who knows? We'll see what sort of relationship we have in the future here. Got a couple sponsors. I'm going to go through this really quick, literally really quick. So I want to thank our guys for Back Porch, American Business Bank, Orange Coast Title, Loan Depot. All these people do business with us in one form or another. Academy Mortgage, Cobalt Escrow, that's affiliated with Coldwell Banker and our group. Elite Inspection Group, good guys over there. Danny and all the guys over at RWM and True Lending, love them. Alberto at ZG Home Loans. Who else do we have? Okay, that's it for our sponsors. So let's get to our snapshot. So thank you for letting me do that little few-minute commercial. So I have one thing, news of interest today. This was posted in Inman today. Today, by the way, is Friday, March 3rd. And this came up on my internet feed or my email this morning. So this is in the news. So what do we got here? Home sale prices post annual drop for the first time in a decade. So that's going to be your headline for the next couple of weeks. Number one, this is a national number, United States. So for those of you that keep an eye on this, you're going to have a couple of things in the news right now. One of them are going to be interest rates are back up. The Fed's doing what they're doing. A lot of upward pressure on interest rates, although today, a little bit of a pullback, a little bit of improvement on mortgage rates or the bond rates and everything that's connected. But you're going to hear a lot of stuff about interest rates increasing, the negative impact that has on real estate. And then, of course, we get this little bit of news. And what they're basically doing is they're comparing 2022 February to 2023 February nationally, and they're in effect showing a pullback in property values. We've been talking about this for months, okay? But again, this is a national number, which means it'll get national news. So in theory, more people are going to see it. We're not going to come back to the slide, but we will revisit this topic here in a little bit. I brought Chairman Powell back up because this man is driving me absolute nuts. I put a slide back on that I've taken off. This was a slide going back to a presentation that Chairman Powell did on June 15th. This is a quote that I put up back in June and July of last year, talking about his reset. This is his quote. I'm not going to read it. But basically, this is talking about Chairman Powell's words that the real estate market needs a bit of a reset. So I think we're kind of in the middle of this reset. My concern or my challenge here with this reset is, what are we resetting to? Reset kind of means, okay, well, there's where I think we might need to be. This is where we are today. Let's reset back to that. Chairman Powell didn't tell us what date we're setting back to, so it'd be interesting to see because we can go back and we can draw some numbers here. So let's jump into it. I'm going to go quick because I've added an extra county. We do not have a spotlight city this time around. We have a spotlight county, and I find this data super, super interesting, as I always do. I'm a junkie with this stuff, so if you're watching me, I suppose you are as well. So we're going to start off with LA, as we always have. I've made a change. Every single one of these charts is a little bit different. Nick Manfredi and a few other people have been saying, Lance, my numbers are a little bit different than your numbers. Why are they a little bit off? When I go into Sierra MLS and I pull these numbers, and I've been pulling the exact same reports for a very long time, 15, 16, 17 years, same program, same data, same search criteria, the whole 9 yards. I have basically said, give me, for example, LA County, every single type of property that's available. A duplex, fourplex, single family, condo, everything except for vacant land. So I'll pull it all right? I'm no longer doing that, all right? So and it has changed our numbers ever so slightly. The charts almost don't move at all, but the numbers have changed a little bit. But what we're looking at now is only single family residences, houses. Nothing else. No condos, no townhomes, no land, no mobile home parks, nothing. This is only single-family houses. So that's true from this point forward. If you go back and you take a look at a video I did last month or anything prior to that, it's got the entire sample of properties in that. So why do I mention that? Well, I mention it because the chart's changed a little bit, but the one thing that I think we all need to keep an eye on is the last several months, which has basically shown some stability, shall we say. So again, LA County median price, shall we say, we've basically been more or less flat since November. That's what the chart says, more or less flat since November. That's a 2-year chart. Here is your 12-month chart. A little difficult to see here, but this bar is higher than this bar. Median price in Los Angeles County ticked up ever so much in February over January. You're going to see a theme here, okay? So this is last year. I think I'll take this off next month. I said that last month. This is just the 2022 where we ended 2022. You can take a peek at it if you want. Probably no need to have it anymore. This is current to peak. Now this is something that changed. When I took out the other property types and I only said give me single family residence only, for the most part, if you guys recall, our peak in most counties, most cities was May of 2022. Well, in LA County, when I took those other property types out and I just said, just give me only single family residence, the actual peak changed. It came back 1 month earlier. So it moved it from May into April. But at any rate, so this is our chart for LA County. Again, it's the exact same charts that we just looked at. I'm just isolating from peak to where we currently are. But again, I want you to focus on the last 4 months. That looks like a stable market to me. We'll see. So where are we? This is the median price in LA County, just under 800,000. That's 7% less than 12 months ago. So what does that mean? Well, I just showed you an article from Inman that said in the United States, for the first time in a decade, we've basically seen year over year price depreciation, price destruction, basically a lower price this month than we did a year ago this month. Well, we've been seeing that for a few months. So if we're paying attention on our market, that's not shocking. However, if you're not paying attention and you're looking at it from a national level, then that might be a surprise to you. So anyway, LA County's down 7%, 5.3% from 2 years ago. I point that out because it's going to be dramatically different than the other counties. I want to bring up my reset, okay? We just said Chairman Powell is looking for a real estate reset. If 2 years ago, somebody had said in the next 2 years, in February or March of 2023, the property values in LA County will increase from where they are to an additional 5.3%. I think all of us would say, okay, that's not a very exciting number, but it's kind of a normal number. It's a low number, but what the heck? You know, we did these crazy numbers. So if getting back to 2 years ago is the reset number that Chairman Powell is looking for, okay. Well, in LA County, we've kind of destroyed that pricing a little bit, and we're only 5.3% higher than we were to a 2 years ago number. But we're 13% off a peak. I know sometimes these numbers can get a little bit crazy. This is that April to where we currently are peak, so we've seen that price destruction. For the next several months, I'm not going to show year-to-date change. It's silly to go, what's the change between January and February, January and March? So we're probably just going to X out the year-to-date change on all of our charts until we get to probably the end of the first quarter. So in April, we'll start seeing where we are year-to-date changes. So the supply and demand numbers. Our supply continues to shrink. The one thing that we've been looking at so often is at what point do we start to see supply increase? If we go back, well, we kind of lost 2 years ago, so we don't have January on here. You're going to have to trust me. January to February, the supply increased. From January to February last year, the supply increased, all right? We haven't seen that this year. January to February, we're still seeing less listings on the market. This really, truly gets back to my argument. It's very difficult to see property values decline, even with higher interest rates, when the supply of homes is so low. So for those of us that are arguing, or friends of mine that were arguing, what are we going to see prices do? And I'm continuing to say, hey, I just don't see these pullbacks. I don't see gigantic anything, in part because there's just no inventory on the market, even with these higher interest rates that we're seeing. This is the LA County chart. Quite honestly, guys, all the other charts are identical. If I literally just tricked you and I just put the same charts up and said this is San Bernardino and this is Orange County and this is Riverside, they almost look identical. So we're seeing less inventory in LA County. The other counties are the same. We don't normally like to see that. We like to see more listings in February. We like to see more listings, kind of like this, all right? This is kind of what we're expecting. Well, we're at least 1 month too late to the party. I really would have, kind of like what we saw here, we saw like a little bit of a gap. I wasn't frankly expecting to see such a significant drop from January to February in listings. That's painful. But the good news is, even with these stupid interest rates that we've been seeing over the last couple of weeks, we actually still had more buyers and sellers come together in February than we did in January. So that trend is positive. So more buyers in the market in January, writing offers on fewer houses for sale. What do? You get a stable price, or in LA County, a little bit of an increase in price. So I took a little extra time to explain LA County because frankly, the other counties are going to look remarkably similar. This is just the 12-month isolated chart for LA. We'll skip past that. Absorption rate, month supply, it's going down again. It's going down. Fewer, that's just, this chart correlates exactly back to the chart with the red bars. Less houses for sale, more buyers in the marketplace, fewer month supply. So that bar is dramatically down. By the way, for LA County, that's 2.7 months supply. Not a very large supply. So what are we looking at? 9,100 houses for sale, 11% fewer than a year ago, 17% fewer than 2 years ago. These are the pendings, 2,100 pendings. These are the numbers that frankly have the industry just dying, okay? This is why people like me and the mortgage people and the title people and the people who make a living selling real estate, the prices are okay, guys. Prices, we're gonna be fine. So if you're a buyer, you're a seller, you're worried about prices, just relax, okay? It's folks like me who own a real estate company and basically pay our bills based upon transactions where you say, hey, you're 25% off them from a year ago. You're 31% off from 2 years ago. That's why we're all kind of a little puckered up here a little bit, trying to get past this. Okay, Riverside County. Now that I did the setup, we can move a little bit faster through the other counties that we have. But by the way, what do we see? This is the 2-year chart. Let's take it to the 1-year chart. Very stable, and guess what? Riverside County, increase in property values month over month from January to February. Surprise, surprise, just like we saw in LA. That's the 2022 chart. This is your peak. It did not change. Keep in mind, single families only. April and May, almost identical. Actually, is this June? It moved. It did move. I'm sorry. We had our peak in May before with my taking out the other statuses and only pulling in single families. Our peak moved in Riverside County, and it moved to the month of June. But again, the last several months, not bad. Last month, uptick in value. So there you go. Stability and even a little bit. I think I said, play last month's snapshot video. I think I said it's entirely possible to see an uptick in property values. I think I said that. It's on tape. We'll go back and take a look. But we saw an uptick in values. LA County and Riverside County. There's your current price. Down 3% from a year ago. Up 16% though from 2 years ago. LA County was only up 5%. So Riverside County was up 16%. 7.5% from peak. Last month that was 8.5% from peak. Went up a little bit. And again, we're not looking at the year-to-date change because it's only been January to February. It doesn't make any sense. What are the supply and demand numbers? Does it look exactly like the LA County chart? It's not, but it looks exactly the same. Inventory down, pendings up a little bit. It is what it is. So very, very similar data. Now the inventory is up a little bit, ever so slightly, from a year ago though. So that's a plus. We're down from the 2 years ago number, almost flat. We're certainly down from peak, but we actually have more houses for sale in Riverside County in February of 2023 than we did in February of 2022. What does that mean? Well, I don't know. It means we have more houses for sale, but the trend is still down, okay? The pendings were up month over month, but they were down year over year. But again, more buyers than in January on less houses. Absorption rate chart looks exactly the same. A little bit less though. It's only 1.7 month supply of homes in the county of Riverside. So what does it mean? 4,600 houses for sale, more than a year ago, more than 2 years ago. Pendings, 1,460, just like we talked about LA County. If you own a real estate office, if you own a mortgage company, if you own a title company, if you're in the business of saying we need to sell some houses, 20+% fewer. That's the tough part. That's why us in the business kind of walk around with that look on our face. We need to get out of this. San Bernardino County, here we are. Whoa, prices up a little bit. We've had 2 months of anomaly. This is 3 months in a row now. What happened? what happened, and now we're back. I frankly thought when I took out everything other than a single family that this chart was going to adjust itself. I thought there was some funky stuff going on. Maybe there was some low-end stuff, a lot of volume in the low end. I took all that out. I only focused on single family, and frankly, the chart hasn't really changed a whole hell of a lot. But what has happened is this value is back. So even though we got a couple of choppy months here, which is very unusual for such a large data sample to see this, again, it's kind of sort of been stable the last few months. Here's, of course, our peak on the 12-month chart. Here's our 2022. We'll take that one out next year. Here's our peak to finish. The peak had not changed. What did change when I did the single family, the April and May are almost identical. Matter of fact, they are identical. Exact same price in April and May. That changed. I went back and compared it to the other charts. But again, we've still seen the downtick. If you want to skip ahead, at 6.6% down. But again, even though this is a little choppy, it's generally fairly stable. So what do we got? Current median 490 in San Bernardino County. It's up from a year ago, 1.7 from 2 years ago, 15%. From peak, down 6.6. We're not paying any attention to that. So LA County, Riverside County, San Bernardino County, generally not a whole heck of a lot of difference, and that's not going to change much on the supply and demand front. The chart looks identical. Listings going down, pendings creeping up ever so slightly, which is frankly a positive. I don't know if you guys can interpret my body language or how I'm feeling or how I'm sounding. I'm not unhappy with this. Matter of fact, I'm exceptionally happy with this because for most of the month of February, or certainly the last 3 weeks of February, we have just been in an interest rate bloodbath. And we were doing really, really well. We got really excited. Interest rates were down in the low sixes. We're maybe knocking on the doors of the high fives. And then a couple of reports come out, Fed come out, make some moves, and the next thing you know, now we're back at 7 and above. So it's been a really kind of rough couple of weeks for us. Having said that, buyers still came to town. Buyers still came to town. So that encourages me. That encourages me a lot. So again, absorption rate for San Bernardino County, not a whole heck of a lot left, or not much difference. 2% more listings than a year ago. 1.6% more listings than 2 years ago, even though the number's down. Pending numbers, 1,300. And again, here we are again, these big, big numbers and fewer buyers and sellers coming month over month. Even though they're coming on lower inventory levels. So 30% change from 12 months ago, 32%, 31%. So normally we do a spotlight city. Today we're going to do a spotlight county. I said, what the hell? I don't normally focus on Orange County as a total too often. I think I did one a few months ago. But I thought it would be interesting since we've got our market forecast coming up here in 10 days or so. So what's going on in Orange County? Well, to me, these prices look to me like they've been stable over the last few months. We've certainly got a peak here, but the last few months, this is some stability. I mean, this didn't feel so good, but we have basically been retrenching in Orange County for the last couple of months. So for those of you that are like big price destruction, markets collapsing, the world is ending, well, median price in all of our counties hasn't changed a whole heck of a lot. Now, I will tell you, it's very, very difficult to see. Orange County is the only county of the 4 where the median price did pull back a little bit. It's almost statistically insignificant, but if we didn't have that trend bar on there, you would see that February is a little bit lower than January. But again, that's meaningless. We're looking overall at what the trend is doing. Are we seeing this? Are we seeing this? Are we seeing flat? And basically what I see for the most part is relatively stable. This is peak to current. So if you are in Orange County, you're like, Lance, it doesn't feel like it's stable. It feels like it's painful. Well, it's painful because it is down 11.3% from peak. And that peak, based upon my data, is April of last year. So that's tough. You know, if you bought a home in Orange County, on average, in April of last year, you've seen about 11% price destruction since then. So we'll see what happens. We'll see what the future holds for us. So our current medium is down 7.8% in the last 12 months, but still up 17%. So there you go, Orange County. Oh my God, it's been a horrible 7, 8, 9, 10 months. Well, yeah, but it's been a pretty damn good 24 months. You're still up. That's why a lot of us are like, everyone just relax. There's our price from peak, the 11%, and we double X's on the year to date. We're not paying any attention to that. Listings and buyers, same exact story. I will tell you though, if these look a little bit lower in Orange County than the other counties, they are. There's not a lot of houses for sale. And if anything, the one thing that I see that's dramatically different in Orange County is I certainly see fewer properties on the market. Is that a factor of price? I think it probably is. I truly think it is. I just think some of the higher end properties, the more expensive properties in Orange County, those folks are just, I think I'm just going to sit back, and they're not listing. However, we did see more buyers. So again, we saw more buyers last month than we did the month before. And again, here's our absorption rate. Orange County doesn't look much different, 1.4 months. Doesn't surprise me, the inventory is so low. Homes for sale, 11% fewer, 36% fewer than 2 years ago in Orange County. That's those red bars, that dramatic decline in those red bars. And then on the pendings, this surprised me. And I want to go back and double check. So for those of you that say, Lance, this is cool, but I want to double check your data. If you have a source to double check it, double check it. But less than 1,000 properties in the entire county of Orange went in escrow last month. That just seems low. It seems like a small number. And based upon these, it is a low number. 27% fewer than 12 months ago, and 44% fewer houses put into escrow in February of 2023 than February of 2021, which was a COVID year. Okay, and I know we always just say, well, we got to compare things to COVID because COVID was nuts, and COVID was nuts. But man, it's just nuts. So 44% fewer sales this past February than 2 years ago. Again, if you're an Orange County broker or an industry mortgage, title, escrow that relies upon transaction volume, you're hating that. But prices are stable. So there you go. Take a little bit about interest rates. We were doing so well. What we have here is a one-year interest rate chart, March to March. We're about 4% a year ago. This is Optimal Blues at 6.8% as of yesterday. Market improved a little bit today. Who knows what it's going to do next week? But it's been rough. It has been a rough couple of weeks in the mortgage rate. If you did the old Google machine and you said, give me a $500,000 loan and my FICO's around 750, it's not going to give you a 6.8%. Okay, this is just a conglomeration of a whole bunch of mortgage rates throughout the country. Not sure exactly where they get it. I'm told Optimal Blue is a good source. I've been quoting it now for a while. But the reality is the old Google machine is probably a little bit closer to what you would really get in the real world if you went to a mortgage professional today. You're looking above 7, okay? So that's a dramatic change from even a month ago. That's, again, got us concerned. So that's what's happening on the mortgage interest rate front. Market forecast is in 10 days or so from today. Wednesday, March 15th, we're going to see a whole bunch of stuff all over social media. We hope to see you at the Fox Theater, and thank you for watching.